All right, you're welcome to the episode 16 of the Forex Light sessions. How are you guys doing? I'm happy to have you all on this call. All right, this is going to be another wonderful session. You know, you know how we do it. The goal is to make some money. Yeah, the goal is to make money. All right, so let's go straight into the chart. As usual, we'll be looking at the previous analysis and see what's up with that. Let's see what happened from our analysis on episode 15. All right, so we looked at AUDJPY and yeah, let's see what happened. AUDJPY after the session. Well, spoiler alert, it was a win. like almost like an instant win. Session. We had a session, and in just in an hour or so, look at what happened. Trade triggered and straight to TP. That's 1.5 risk reward ratio. That's quite yeah. That's reasonable money. And some good profits. All right, this is what gives you confidence in forex when your analysis, when things go your way, right? like there's nothing as good as that in forex. You know, that is how you build confidence. You be able to repeatedly predict market direction and see it go exactly as you predicted. It's always an incredible feeling. It is always an incredible, a beautiful feeling, and yeah, I'm happy. Yeah, I'm glad that my analysis so good. They've usually been going in our direction. All right, I did this analysis earlier. I expected the market to, the market was ranging around this side, and I thought that okay, if this market, you know, you can see this is the uptrend. All right, so it's ranging, which normally happens before a change in trend direction. So it's likely to want to change into a downtrend. So that was the idea behind this. But how do I know when it's ready to start going? That is where this line came up from. Uh, can't really say exactly what I saw. Okay, I think what I saw was this key level. All right, 143.0000 key level. All right, so I think the idea was if price breaks that key level, then if it breaks and closes below it, then it's likely to want to start going down. All right, so that I just set my sell stop. Ideally, I would have preferred to wait for it to happen because it will surely retrace. Even if it drops, it will surely retrace, and the best entry would have been after the retracement. All right, which I can still do if I happen to meet the market at the point of retracement. So market could retrace. So how do I know that it has broken structure and it is ready to start going? Yeah, like I said, I look at the swing point. All right, so let's quickly identify the swing point for this movement of the market. All right, so this is price action. All right, lower higher I, lower higher I, lower higher I, and then the lower I. So this is the break of the trend line. So what I'm waiting for is a break of this previous lower I. This is break of this. That is what will confirm the downtrend. Uh, right now, it is yet to break it. So the downtrend has not been confirmed yet. The downtrend has not been confirmed yet. So let's see what happens. Let's see what happens. All right. So let's move on. Trade is already live. This trade is yeah, it's not really. I wouldn't consider it one of my best entries, but I had it. Yeah, it looks okay. Like I said, my preference was waiting for it to happen before I enter, but I wasn't sure when that was gonna happen, and I guess I had a bit of FOMO there, fear of missing out, which is not a sign of a good trader. So yeah, that's a lesson for me today. Avoid FOMO. You know, let the trade do what it does. Don't get um, don't get agitated. Don't force it. Yeah, don't force it. Allow the trade to play out. You know, if it goes, well, I think I actually did not. Did I enter that trade? Okay, I think I took it on my demo. Okay, I think that was what happened. Yeah, I took it on my demo. Because like I said, it's not a trade that I. It's not really the most confident of trades. So I took it on my demo account. So yeah, not on my live account. So yeah, that's that. I guess that's my way of managing that. Okay, so let's see. Okay, let's see what we have on our pairs. JPY. So this is more like an head and shoulder pattern. All right, so it has formed the head, left shoulder, the head, the right shoulder. Now that means it's about to go down, all the way down, go down, all the way down. This trade, I'm gonna close it. Yeah, so I should have cut it earlier, but that did not happen. So that trade is gone. So like I said, this was an head and shoulder pattern. Where do I start this from? Okay, so it's all right. Let's start it from here. So we got our left shoulder, got the head, and then the okay. This would be our right shoulder. You wonder why I picked the next one because it's the higher one. All right, it's the higher one. It has broken the previous one, so I had to respect that. So this is my head and shoulders pattern. And what was my entry? My entry, of course, would be this would be my entry. Sorry. Yeah, so this would be my entry. This when it breaks this line, then I will take an entry. The neckline, that's what determines entry. How to enter the head and shoulder. Break of the neckline determines the entry for an head and shoulder pattern. So right now the price is right on the neckline. It has not broken it. So when it breaks it, that will be the confirmation for your entry. So what I can do, all right, if I want to use FOMO, I just set my sell stop and my sell stop below. You can see what happened there. It actually went below the neckline. It was still, it was not ready. It still went up a bit. So that's the risk of setting pending orders on trades like this, without waiting for it to play out. So the target TP for a head and shoulder is the head to the neckline. That's the target TP generally for a head and shoulder pattern. So this would be my TP. Let's see what we have. Let's see. Okay. So resistance, support. Okay, I think this is good enough. So this is support area. All right, I'm looking at this and this, and yeah, of course this as well. This is basically a key level. It has support, resistance, the same level. So that will be our TP. That will be our TP for this trade. All right, 1.7 risk reward ratio. Okay, then let's look at our stop loss. What should our stop loss? Ideally, our stop loss should be above the head. That is the safest stop loss for this kind of trade. Should essentially should be our stop loss. But on my account that I'm taking this trade, I can't have over 100 pips stop loss. That is crazy. Number one. Then yeah, that's too safe. I don't know if there's anything like that. That's too safe. So I'm just going to. Then the next best stop loss level would be above the right shoulder. All right, that will be above the right. That is still 82 pips stop loss, which is also still too high for my account. All right, so let's see the next best, the left shoulder, 57. My account, I actually I take maximum of 50 pips stop loss for my account for my trades. That's the maximum stop loss that I take, 50 pips. Um, yeah, 50 pips. Now, the only thing I'm yet to fine tune is the difference between, GBPS and GPYPS are a bit different in terms of their pips, in terms of the magnitude of their pips and what it signifies in dollars. So that is the only thing that can make me tolerate, something above 50 pips as my stop loss. All right. So another thing I can do is to just wait for this trade to get confirmed. All right. That is, I'll wait for it to break and retest before joining at the retest. When I see a signal candle at the retest, then I join the trade and follow it all the way down to my TP. But the only reason why I may not do that is because, as we know, many trades don't retest, just go all the way. And if you're waiting for a retest, you would have missed that opportunity. You know, when you and it's yeah, that's one thing that's one thing that makes me reluctant to wait for a retest and just set my pending order. So let me get a quick overview of this trade, this price action, and see if we can get other confirmations, other confluences, and whatnot to basically, you know, to basically, yeah, possibly inform a decision on what to do. You know, but I want to confirm. Okay, from what I'm saying here, this has this is this has already broken structure in terms of it has broken the trend line, it has broken the previous swing point as the previous lower high. So it is surely it is tendency for it is most like that's changed character. It is now a downtrend. It is now setting up a downtrend. Now the only thing in that case, okay, so let's quickly see what that means. Let's quickly see what that means. So this was my previous swing point, and it has broken it as we can see. So let's see if the trade is ready to start going down, or is still trying to retrace. All right. So now this is my Fibonacci. Okay, good. So the trade already hit my 50%. Well, I think I did this analysis yesterday, but I deleted the Fibonacci too. Okay, that's fine. I think I'll leave it there this time around, so I don't have to repeat this again tomorrow. Okay, so good. Yeah, so the trade already hit 50% Fibonacci, which is, my coach calls it exhaustion level. That's an exhaustion, meaning the trade has exhausted and is ready to move. So some prefer trades, retracing into these levels for them to for them to be sure that it's ready to move. But either way, I know that it's already in the area where it can start its journey down, down, down. In which case, I would like to follow the ride. Honestly, I would really like to follow the ride. If it's ready to go down, you know, I would like to follow the ride, to join the ride, okay? So where the flag then went up, you know, got to the level and now from the head and shoulder and about to come down again. Yeah, it's likely to come down, like actually go down, 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 down. So I think I'm okay with having this trade. This trade looks solid. Looks solid. So TP1 looks solid. Now, but I based on from what I can see on this trade, I don't want to just have TP. I want to have at least two entries on this trade. Because like I said, it's likely gonna go down. And my second entry, I want it to be open. you know, I generally don't do open trades. I always set a TP for my trades. You know, because open trades are they are like say difficult to manage. Not really, but they're just tempting. Like you wouldn't know when to exit, you wouldn't know when to keep it, and it just messes up your discipline, messes up your mindset. If you wait too long, the trade can retrace and you lose all your profit. If you don't wait long enough, when you close it, you see the you see the trade still go so far, and you will have made more. So it just messes up your profit, messes up your mindset. So because of that, I chose to I chose to stop open trades and go for TPs. But then one of my coaches said something yesterday, like don't limit your potential, like don't limit your potential, yeah, don't limit your potential, and it's like, oh God, come on. I thought I just decided not to have open trades. So it's what do we do? It's a case of what do we do? And the thing is, for trades like that, you know, it's better to join early. If you want to join in the middle, anything can happen in the middle, right? Anything can happen in the middle. That's the annoying part of such trades. Anything can happen in the middle. The best time to join is when the trade is still young, so that you know you have you have a reasonable stop loss, and it's not crazy. It doesn't affect you too much. So okay, so I think I'm okay with this. I think I'm okay with this as my. I have I have 1 to 5 risk reward ratio. Like I normally, you guys know I love 1 to 5 risk reward ratio for my TP2 minimum 1 to 5. All right. So okay, good. I think this trade looks good. I have my TP. I have my I have my TP2 set, not an open trade like I thought of doing. So I think we have ourselves a trade to look at. This trade is gonna last for a while. Anyway, the TP1 at least should show. Tomorrow is Friday, so TP1. Let's see if market can move it. Let's see if market can move it tomorrow and reveal to us the accuracy of our analysis. All right. Like I said, I would have preferred this trade to play out before I join, but some if the best sometimes waiting for information, you tend to miss the best entries. So it depends on your style of trading anyway. My style of trading is still like in the formation stage. So I'm okay with waiting for confirmation. I'm okay with just certain depending on others, because my style, I'm still not good at just staring at the market, waiting for things to play out, alerts and all that. I prefer setting my order and going to sleep. Yeah, literally going to sleep and allowing the trade to play out. So that is my preference. That is what I enjoy doing most. You know, and yeah, because of that, of course it involves more risk. It involves more risk, but yeah, everything has a good and bad sides. Like I said, you get to enter early, so you get to make more. and riskless too. So depending on how you look at it, it's a good thing. For me, it's always a good thing. Everything around me are good things for me. So all right, I think that's good enough for today. We got ourselves an analysis to look at. So this is surely gonna make us some money. Are you guys confident? Are you guys happy? Trading is all about confidence. Trading is all about joy, excitement, being happy at what you do, being happy at your growth, your development. Basically, joy, excitement, energy, positivity, growth. You know, trading is amazing. It's incredible. Wow, we've been around for a while tonight. All right, thank you guys for joining on this session. I'm sure you've gained some incredible value. I'll see you guys on the next episode of the Forex Light. Bye bye.